Here with this week's hottest stories in the investment world, this is Zach's Friday Finish Line.
Hello, and welcome to the Zach's Friday Finish Line. I'm Ryan McQueenie, an associate stock strategist here at Zach's, along with one of our editors, Maddie Johnson.
Today is Friday, February 8th, and we are here to recap this week's biggest stories in the investment and financial world. But before we get to all of that, and it was actually a really busy week, we will kind of want to start with a bit of housekeeping, as this will actually be the final show of the Friday Finish Line.
Yeah, I wish we would have looked up the total number that we were on so we could say it officially, but we're well over. I think we're approaching like 200 of these, honestly. We're well over 100.
We've been at it for a long time.
Around almost 150-ish, I feel like. But yes, I'm moving on to a new opportunity next week. Those who watched the free lunch saw me wrap that up yesterday. Kind of wrapping up the shows here last full week. So I guess it's a bittersweet moment, but
yeah,
it's been a fun Friday tradition for years now. Thanks everyone who's been around for a while, who's listened all that time. Newcomers, sorry that we're wrapping things up already, but yeah, it's been a great process. We've watched our listenership grow steadily over that time. So we definitely appreciate the interest in supporting, and it's been a good time.
Yeah. So as Ryan rides off into the sunset, I'm taking on a few more tasks and responsibilities, and here at Zach's. So
you'll see Maddie's name more at other places, but no.
I know.
Longer
I really
am
kind of regretting not getting a new headshot the last time we did that, but I'll have to wait till the next time the photographer rolls into the office. Because I do look like so different from, I have like shorter hair, a little bit blonder, rosy cheeks. But yeah, anyways, yeah. So you'll probably see my face more on more content here, but yeah, final show of the FFL. And we're happy and that you enjoyed listening to us chat about all the financial news of the world and also random things
and we
of our tangents that we have gone off on.
I will say that this final episode is like a perfect final episode in that it is very classically formatted in exactly how we typically do things. So it's a good one to go off on.
Yeah, so we do have a lot of news today. We won't get into the Jeff Bezos National Enquirer saga because it has turned into quite the saga. I read the blog post last night. Blog post, not post. And then read like 5 other articles trying to describe like what, like all like the different angles, like what it means, like is it really extortion, like what like the legal term is extortion, to like does he have a case, like how can the billionaire sending quote unquote below the belt pictures is really the victim. And I was like, wow, that's a really good point. Anyways, but yes, if you haven't read the post on Medium that Jeff Bezos wrote last night, 2 nights ago, on maybe it's actually Wednesday now. Please do. It's worth the read.
Yeah.
But anyways, let's move on.
What a wild couple weeks it's been for that guy.
And let's talk about the Blockbuster Bank merger that we saw earlier this week.
Yeah, this was a big one. BB&T Corporation and SunTrust Banks, 2 of the country's largest regional banking companies, announced an agreement to merge, which, if everything holds up through the regulatory approval process, would create the 6th largest commercial bank in the United States in terms of assets and deposits. The combined company would have nearly $442 billion in assets, $301 billion in loans, and $324 billion in deposits, serving 10 million households around the country. It's an all-stock deal. It's expected to close in the last quarter of the year and would be valued at $66 billion. Under the terms of the agreement, shareholders of SunTrust would receive about 1.3 shares of BB&T for each SunTrust share they own, meaning that BB&T shareholders would own nearly 57% of the new company, and SunTrust shareholders would own roughly 43%. of whatever they land on in terms of the new name, because it is almost an equal merger. Technically, that means BB&T is taking over SunTrust, but just barely. I mean, that's semantics. So in recognition that this is kind of a merger of equals, the combined company is going to operate under a new name and brand, which is to be determined later, but prior to the closing of the deal. Further, the new bank's 14 board of directors are going to be evenly split between the two companies. So this is as close to a true merger as you're going to get these days. Going to end up in several years work out to be a benefit for shareholders based on what they're saying early. Of course, they're always presenting these things as benefits. You kind of have to watch whether that actually plays out the way they expect it to over the next few years. But at first, one upcharge, a merger expense of $2 billion. So once you get over that hump, it's expected to generate an internal rate of return of roughly 18%. For BB&T shareholders in 2021, GAAP and cash earnings per share is expected to benefit 13% and 17%. SunTrust, those figures are 9 and 16%, respectively. Again, in 2021 is when you're looking for this to start benefits. So closing in 2019, probably going to see those costs come into play in 2020, and then it will hypothetically be an earnings benefit the following year. So wowzers, big merger for BB&T and SunTrust. This puts it, I think, if I was looking at the chart correctly, I think this would put it right above PNC in terms of U.S. financial institutions, and then obviously right below the mega giants of like the JP Morgans and the Citis and the Wells Fargos. But yeah, it was a really tough year last year for regional banks, even though, rising interest rates typically tend to help regional banks more so than anything. Didn't work out that way. And this is seeming like, it's simultaneously kind of breathing some life into it because there might be some more mergers potentially, but also kind of an interesting pivot for two of the largest regional banks after a tough year.
Definitely.
They're going, let's just do this together. So, if you bank with BB&T and SunTrust, this is going to affect you personally. If you're interested in investing in regional banks, this is going to affect your portfolio.
Yeah,
so
absolutely.
Big merger news. And with that, we're going to move right into a little lightning round with earnings, because this was another big week. We're over the hump. More than half of the S&P 500 has reported, including some big names this week.
Yes. So we're going to start with Alphabet. So on Monday night, the Google parent posted its latest quarterly financial results, and adjusted earnings came in at $12.77 per share, beating the Zacks consensus estimate of $11.08. So a wild beat, almost like an Amazon beat. And this improved nearly 32% from the year ago period. Revenues, and this is important for Google. So revenues excluding traffic acquisition costs, or TAC, was $31.8 billion, and revenues were up 23% year over year, and also came in ahead of estimates. So Alphabet's earnings results did raise some eyebrows, kind of like I hinted at earlier. The majority of the actual bottom line beat can be credited to $1.3 billion in unrealized gain from a non-marketable debt security Alphabet held. So the maneuvering to beat earnings estimates underscores some frustrations investors had with the report. And this namely came from when Alphabet spent a ton of money. Capital expenditures grew to $6.9 billion from just $3.8 billion in the comparable period. So, in other words, they were spending some dough.
Almost doubled.
Yes. And the company's headcount increased to 99,000 from just over 80,000 a year ago.
Hired 19,000 people in a year. That's pretty crazy.
Yeah. And side note, but she's not one of my good friends, but I know her from we hang out in the same group of people every now and then. She just started working at Google.
In Chicago? Hiring a lot of people in Chicago. Big Google office there. It's not too far away.
The last year.
Yeah. I also know someone who counts on that headcount in the last year.
So I feel almost it's not unusual for people to be like, oh yeah, I know a person who just started working at Google.
Yeah.
And this, looking at this number,
2 anecdotes out of 19,000 potential anecdotes out there.
Yeah.
I will say
she also does have like a really cool job. I'm a little jealous.
I mean, just in general, working for Google sounds pretty cool
Yeah.
most of the time. 99,000 actually puts it well ahead of like the entire. I was looking at like, what is 99,000 people at one company? How many industries is that bigger than? That's bigger than the entire domestic coal industry has jobs in it.
Wow,
these
that's
days.
that's like a interesting metaphor.
Yeah. I don't know if it's a metaphor, but it's a
comparison.
Yeah, it's an interesting thing to think about considering how many people used to work in the coal industry.
For sure.
And how big that used to be here, and now, you know, the one company is bigger than the whole business.
Definitely. Okay, so this spending spree mostly related to investing in cloud and hardware. And this segment is listed under quote unquote Google other revenue. Very vague, but it's basically cloud and hardware. So this Google other revenue surged 31% year over year in the recent quarter. And Alphabet's core advertising business also grew 13%. So no small numbers there, a lot of growth. But that earnings results was like wild.
Mm-hmm. It is a classic example of why some people don't even care about earnings beats, though, because it's like some really funky accounting stuff to get it to that total number with the non-marketable debt security that you talked about. Yeah. It's weird.
But moving on, so one of the big media, probably arguably now one of the top 3 biggest media companies in the world.
Yes.
Also reported this week.
And even better in terms of similarities, we're going to have to do some describing what the heck the segment involves here, because we got new segments from Disney. Spoiler alert. Disney reported on Tuesday afternoon, adjusted EPS of $1.84 was actually down 3% year over year, but beat our consensus estimate of $1.57 relatively handily. Quarterly revenue was $15.4 billion. That also beat our consensus estimate of $15.2 billion. And this is where we jump into the segments. Media networks revenue was up 7% on a 4% jump in cable networks revenue. However, the ESPN division saw its operating income fall based on higher programming costs. That's been the story for ESPN the last couple of years, really. The Disney's now... hang with me here. So this is Disney's Parks, Experiences, and Consumer Products division, which is a newly formed reporting segment that, in my view, basically encapsulates like the kids part of Disney.
Okay.
So as it says in the name, Parks and Consumer Products. So the parks are obviously big for the kids. The consumer products, I'm envisioning
and
a lot of the
adults
toys.
Who wish to be kids.
Yeah, there's your one-off adult who is obsessed with Disney. We've all got those. The toys, there's the Disney store, the merch, the branding, all of this type of stuff now falls under this category because it's moved some of its interactive media stuff into a different thing, which we'll talk about in a second. But this Disney classic kind of revenue that jumped 5% in the quarter, but studio entertainment was down 27% year over year. No Star Wars this year, so that's a rough comparison.
Really?
Yeah, they did actually. I think the
just
consensus,
because of no Star Wars.
Yeah, and I think the consensus actually did a heck of a job without that comparison. Like did pretty good to make it not be a worse comparison because of no Star Wars.
They had like 1 million Marvel movies last year.
Yeah, well, they've had 1 million Marvel movies for like the.
But it was okay. But I guess so.
Incredibles 2 maybe also wasn't. No, that was in
the
Q3.
Summer.
Yeah, I'm trying to think of what came out.
What did come out? They might have had. Shoot, they might have not had any. Well, they had Mary Poppins.
Yeah.
They might not have had any big Christmas time release.
Yeah, just that is the only thing I can think of. I'm sure we're missing an obvious one,
yes.
or like one of several Marvel movies that we just didn't pay attention to.
No.
I guess.
But Star Wars comes out this Christmas.
I guess I don't know. I've lost track. I'm so confused by the
Star
whole
Wars
thing.
9.
Because then once
episode 8?
Once that Disney Plus comes
know.
in line, they're gonna have a Star Wars TV show on Disney Plus. So it's a mess. Is it? Are we? Wait, no, aren't we? Shouldn't we be on an episodic Star Wars now? Shouldn't it be one of the between ones?
Yeah. So Solo came out and was a huge flop.
Yeah. Well, relatively compared to the
critically
rest of the Star
and
Wars.
at the box office, relatively comparatively, it was a huge flop.
Yeah.
I also could not make it.
It's on a different scale to other franchises. Did you like it?
Not really.
Yeah, it was okay.
I think I stopped watching like an hour in.
Whatever.
I was just kind of bored. I like really wanted to watch it because I really wanted to like it because of the cast. You know.
Yeah.
You have Mother of Dragons.
Yeah.
You have Childish Gambino.
Yeah. I like how you didn't call either of those two people by their given names. That's just how they are now. But no, was that the most recent one, Solo?
Yeah.
Okay, so then we'll get an episode 1.
What episode was The Last Jedi?
Well, it was the second of the new trilogy, so that
was 8, right?
Yeah, so we're at 9. And then we'll get the other,
which I mean,
Star Wars story.
I know
after
people like have like the hot takes on The Last Jedi.
Yeah.
I personally thought it was great.
I thought it was great too, but it was one of my favorites.
Yeah. Anyways.
Yeah. So anyway, the last thing we should mention with Disney, which I kind of hinted at there, talking about the Disney Plus Star Wars series that's coming. The direct to consumer in an international segment, that's where you're kind of seeing things like, where you will see things like Disney Plus, where you are seeing things like ESPN Plus. Revenue there was actually down 1% year over year, but subscriptions to ESPN Plus doubled in under 5 months. So rapid growth rate there. Units still lost about $136 million, though, on about 900-ish million in revenue. Investments in ESPN Plus, Disney Plus, proving costly right now, especially when you think about Disney Plus hasn't even launched yet.
Sure.
I'm imagining a lot of money going into making sure that's a good product before it hits. We should be seeing that soon, though. 2019, somewhere in the middle point of 2019.
They've been talking about it for like
years.
3 years already.
So I'd love to see it finally. We'll see if I buy it, and we'll see if that Star Wars show and all the many other things going on are fun. You're going to bounce it now to a report came later in the week from none other than Jack Dorsey himself.
Yes. So we actually, both of his companies actually reported, but we're going to talk about the bigger one. Actually, I'm sorry. I just confused Jack Dorsey with Evan What's-His-Face from Snap. So my bad. We're just going to talk about Twitter and we're going to ignore that. So Twitter reported on Thursday afternoon and shares plummeted 10% despite better than anticipated results. Twitter's Q4 revenues jumped 24% from the year-ago period to reach $909 million. And this crushed our consensus estimate of $872 million. Adjusted earnings came in at 31 cents per share, and this was up 63% year over year and ahead of the Zacks consensus by 6 cents. Twitter posted its first full year of profitability in 2018 and record quarterly revenues. So, I mean, Twitter has been slowly making a comeback. I think quarter after quarter for a while now. And it's good to see that these numbers have been like these profit numbers have been consistent.
Yeah.
But looking at users, so Twister's monthly active user figure, which it has reported for years, did fall 1.5% sequentially to 321 million. And this was down a staggering 9 million from the year ago quarter. But the platform has shed users in recent periods in the face of new regulatory policies in Europe as it moves away from SMS-only monthly active users or MAUs. But because it doesn't think this is like a good read on its quote-unquote real user growth, Twitter is now reporting daily active users. So something that
for the first time ever. Yeah.
Facebook does as well. Facebook
and
reports
Snap,
both. Yeah. The company said that daily active users were up 1.6% to 126 million in the quarter. And Twitter says that these users are the monetizable ones, whereas some of the monthly active users it lost were of low quality to advertisers. So overall, Twitter said it expects Q1 revenue looking ahead, between $715 million to $775 million. And the midpoint of this range was below our previous estimate of $762 million.
That MAU to DAU shift that you outlined there, I think got a general pulling an Apple reaction where they're kind of cloaking the iPhone unit sales now.
Sure.
I kind of see both sides of it though, because as you said, that they're calling it the monetizable users, the daily active users. These are the people that are really engaged. A lot of the users that they've lost over the past year have been people who got Twitter only through texts, which is a foreign concept to me, but it's something that was really big back when, before smartphones were as big as they are. Those people don't see advertisements. They don't see ads at all. So it's like, why would we report to you how many users we have total when those aren't, to us, monetizable, literally? Right. So I can see it both ways. It's interesting that how many years has this platform been around, and we're just getting the first official daily active user count. And I think the surprising thing for me is there's a massive, massive discrepancy between daily active users and monthly active users. We're talking about that's almost double. That's more than double. It's almost 3 times as many monthly active users than daily active users. So that's pretty crazy to me. And I think that probably just showed people the engagement, that really regularly engaged, everyone checking Twitter all the time thing. It's a little bit smaller than it feels when you think about, some of the most important people in the world are using Twitter to communicate.
And also how much Twitter is quoted every day in the news.
Every day, yeah. Well, I mean, the president of the United States.
Well, yes, but on major news shows, what's AOC tweeting?
Yes.
I don't think Pelosi tweets, but what's Trump tweeting? What's all of these
yeah, and even
these politicians, these celebrities,
exactly.
These Twitter reactions.
Outside of politics, it's every news story, every pop culture news story. It's there's a segment of, and you can check what the buzz was on Twitter. Here's 3 celebrities' reactions to it. So, and especially when you're part of it, I am one of these daily active users, I'll admit, hands up. And when you're a part of that, and when you're really following along with a pop culture event as it's happening and you're on Twitter, it feels like everyone in the world that is watching this thing is in this conversation live. That's one of the really cool things about Twitter. And then you see 126 million daily active users, and all of a sudden it feels way, way smaller when you compare that to 1.2 billion some odd users on Facebook. It's wild to me.
Yeah. And also that the monthly active user figure, I feel has hovered around this number, the 321 million.
Yes.
For how many years now?
Yes.
And we knew this. Twitter's not a growth company. They're never really going to grow their user base.
Yeah.
So
it's about making more money off the ones that are already there.
They have to monetize them. So, yeah.
Interesting results from Twitter. We'll see where we go. I think that a bit of an overreaction on Thursday itself, if in my humble opinion. So we'll see how that plays out over the next couple weeks. But we want to end the show. Well, selfishly, I wanted to end the show on what I think is, when you look back on the Friday Finish Line, one of our most talked about companies, we both are patrons of regularly, I would say.
Yeah.
Company we always tend to cover whenever there's news, maybe even force it into the show when it's not even that good of news.
And importantly, knock on wood, both of us have never gotten sick from eating
This is true, and I've defended it to the death on this show through the worst of the days. And that's Chipotle. So what more fitting? If you've been listening for years, truly no more fitting way to end the show than be talking about Chipotle. Reported earnings this week, almost in a sign from a higher power that we should finish the report with the Chipotle report. Chipotle soared on Thursday. Better than expected results. It's a good report. Adjusted earnings of $1.72 per share surpassed the Zacks consensus estimate of $1.39 and improved 28% year over year. Revenue of $1.2 billion was just ahead of the consensus and up 10%. Comps in the quarter under review rose 6.1%. Increase in average check contributed about 3.3% because of a menu price increase. And also then 2% can be attributed to comparable restaurant transactions. So that means people coming in. It was interesting. You can always bump up those comps by raising menu prices. So you also want to look at.
Did you notice the prices?
I didn't, no.
I didn't either.
I think some of that has to do with the fact that I'm already feel like I'm at peak pricing because like the one I go to the most is down in the Loop in Chicago, which is already you can like the ones that are up on like the north side, you can tell there's like a 40 to 50% difference.
Yeah,
because you're getting the like Loop lunch surge pricing down here.
That's very true.
And that's the case at most chain restaurants. Like our Starbucks in this building is a little bit more expensive than Starbucks in different places. So I just didn't notice it. I think for that reason.
I didn't notice it because I always get the extras.
Yeah,
you
go hard at Chipotle. You get everything.
I always get the guac.
Yeah.
Chips and salsa. Always get chips and salsa. And now I get the queso. I get a side of queso too, and that's an extra $1 something.
Yeah,
it's good.
Yeah, they like you at Chipotle. You're helping drive these.
I at least pay nearly $15 every time I go there. So
and that's what you have to. You just have to be okay with that. You just have to commit, and that's the way to do it.
And like, fine, sure.
So Maddie helping lift some of these numbers. Restaurant level operating margin was 17%. That was up 210 basis points. It's pretty good improvement. Just 14.9% in the restaurant level operating margin last year. This had to do with the price increases, of course, but also a nice little downturn in the price of avocados, those pesky avocados, which, if you'll remember, we have discussed in the past, the price of avocados putting some stress on Chipotle.
Yes.
It's a commodity, ladies and gentlemen, so, it fluctuates, and that was an interesting little tidbit. Cash position really strong here for Chipotle, up to $250 million in cash and equivalents from just $185 million last year. Guidance decent. Management expects comps to grow in the mid-single digit range, which is what we saw this quarter, with an estimated effective tax rate between 27% and 30%. Still on the high end, despite the corporate tax cuts. These primarily domestic restaurant chains are when you look at corporate effective tax rates, these are always among the highest that you'll see on Wall Street. Expecting to launch about 140 to 155 restaurants over the next year. In the most recent quarter, opened 40, closed 12. It's at 2,491 restaurants, very close to that 2,500 mark. Should be getting there soon, inching its way to 3,000 restaurants.
Oh, yeah.
It is hot at Chipotle right now. A pretty good quarter there. New management team really doing a good job so far. I think we pretty positive results, mixed reactions to Twitter, Disney, Alphabet, and of course, reminder, we talked about that Blockbuster Bank merger at the beginning of the show. Busy week. Only really scratched the surface, but what can you do? And that's it. This is our final wrap up of the Friday Finish Line. Thanks once again for going on this ride with us and listening to the show every week. It's been fun. We're gonna miss the tradition of the Friday morning sit down and recapping these news events. Gonna miss our inside jokes almost about Chipotle and all of the things going on in retail and Jeff Bezos being a robot overlord. Which just feels like this is a good time to leave with all of the personal things Jeff Bezos is going through that we can't even make jokes about. So yeah, it's been fun. Thanks, Maddie, for co-hosting for several years with me. It's been a great time. If you want to say bye personally, or if you want to get in contact with anybody still making a podcast here at Zacks.
We love getting emails at podcast@zacks.com.
Absolutely. There's also still a bunch of other podcasts on the Zacks podcast network, if you will.
Or if you want to listen to all our old episodes.
Yes, they will be live forever at zacks.com/podcasts. Subscribe to this feed. There will still be some shows going up into this specific feed. So if you want to subscribe and leave us a rating on Apple Podcasts, that would definitely help. You'll be getting Ben's Full Court Finance still at some point here, so don't think that will go away. Yep. We won't have a barren feed for you. There will be new updates. And then, of course, check out all the other things from Zacks Investment Research you can find on SoundCloud, Spotify, Stitcher. We've got great content there. Thanks again so much for joining us week in and week out. We really appreciate it. And that's it for the Zacks Friday Finish Line.